everyone. Joe Vitale here for Daily Wealth Management. With this week's Gradient Investment Market Update, all data is gathered as of the week of October 20th, 2025. Let's get into the week in review. Major indexes ended the week higher despite ongoing government shutdown. The NASDAQ was up 2.14%. S&P and the Dow 1.71 and 1.56% respectively. Small caps were outperforming, rising 2.41% for the week. Fixed income, in fixed income, the 10-year U.S. Treasury fell below 4% for the first time since April, while the 2-year briefly dipped to 3.4%, which is the lowest level in more than 3 years, showing a flight to safety amid ongoing uncertainties around the government shutdown and emerging concerns around regional bank credit quality, although we've seen a lot of the regional banks be pretty strong. Gold continued its strong run, rising over 5% for the week. In contrast, crude oil declined for the third consecutive week, dropping to a 5-month low on Friday and amid concerns over potential supply disruptions. Talking about the upcoming economic releases. This week, key economic data releases will offer fresh insights into inflation, consumer health, and the housing market. On Thursday, the 23rd, existing home sales data will shed light on the housing market activity, followed by new home sales data on Friday, the 24th. Also on Friday, the CPI, which was originally scheduled for today, will be released. Now, additionally, the Consumer Sentiment Report, which is supposed to be released on Friday, will provide further perspective on the strength and confidence of the U.S. consumer, but the federal government report could be delayed or canceled pending the resolution of the government shutdown since October 1st. However, a lot of these reports are always revised down the road anyways. I mean, they say, oh, we got a revision. Well, why can't you get it right the first time? We don't understand that. Why are they there? But hopefully they'll get it right. Let's talk about the market outlook. The government shutdown has now entered its third week with no resolution in sight. Looking ahead, the CPI report originally that we talked about was for today. It's supposed to be released on Friday as a Bureau of Labor Statistics confirmed it will proceed with publication. This will mark the first major economic release since the shutdown began on October 1st and is expected to provide key insights into inflation trends and potential implications for the Federal Reserve, which will meet next week, which we're expecting to see a 25 basis point cut again, so but we'll see. The Q3 2025 earnings season kicked off last week with major banks reporting strong results. Large money center banks posted solid earnings across the board, supported by resilient customer spending and higher trading and investment bank revenues. In contrast, regional banks faced heightened investor scrutiny over the credit quality of their corporate loan portfolios. Reports of loan fraud losses at 2 institutions fueled concerns about broader credit deterioration. However, most large banks exceeded expectations, highlighting that default rates remain low and capital positions strong. Overall, despite isolated weakness, the broader banking sector continues to demonstrate resilience. They got burned back in 2008, remember, with the mortgage crisis, so they've really been sticklers on credit quality. Loosened up a little bit recently, but still they're very stringent. As far as rebalancing in the gradient portfolios, there was no rebalancing done. Of course, they're actively managed, but every so often they have to take stocks in and out of the portfolios. None was done there. Let's talk about stocks in the news in our G40I and Core Select, or in our contrarian choice. ASML chipmaker reported an earnings beat and positive bookings for its most advanced EU lithography machine booking. It also provided a positive outlook for 2026. Shares were up 4.53 for the week. And JP Morgan Chase, which is in the Core Select and G50, beat earnings expectations last week, driven by trades and investment banking fees. Profits were up 12%, revenue jumped 9%, and shares were lower, 3.38% for the week. That concludes this week's market summary. Thank you so much for being part of the Vitale Wealth family. If you'd like to get a hold of us, please give us a call, 855-756-5700, or visit us at vitalewealth.com. And that's it. God bless you. Looking forward to seeing you again next week.